Hi, everyone. I'm just going to give about 30 seconds or so for other folks to trickle in. All right. Hi, everyone, and thanks so much for joining us today. I'm Anna Pham, Director of Content here at Restaurants Canada, and I'm so excited to welcome you to today's webinar, Mismanaging Tips Can Cost You Over $30,000 for Every Million in Sales. This is one of our most in-demand topics, and for a good reason, and this is why this is part two. Tip management can cost your businesses big time, and today's session will help you get ahead of the curve with solutions from our partner, Atlas. So before we dive in, just a few quick housekeeping notes. Today's session is being recorded and we'll send you the link afterwards along with the presentation as well. Please feel free during the presentation to submit questions into the Q&A box, not the chat box, the Q&A box, and we'll cover as many as we can in the live Q&A at the end, or Afshin and James can cover a few questions as well during their presentation. And if you run into any tech issues, of course, try refreshing or using the chat to reach out to our team, and we will be behind the scenes to support you in any way. And so now to kick things off and to introduce today's speakers, I'll hand it over to my colleague, Kris Barnier. He is our VP for Central Canada and a key member of our government relations team here at Restaurants Canada. Over to you, Kris.
Thanks very much, Anna. Well, we know at Restaurants Canada that tipping is an incredibly complex issue and one that is an ongoing challenge for a lot of operators. And by the nature of even how we've branded this session, it's something that can cost your business a lot of bucks. So for us, we know that there are all kinds of complexities around tip compliance, tip pools and payouts, and how federal rules intersect with provincial rules. We have a couple great partners with us today, James Rhodes and Afshin Mousavian, who have been absolutely wonderful to our team in terms of helping us with a lot of guidance and compliance, including engaging CRA directly. And that's something that we'll continue to do over the next little bit. So with that, I'm going to introduce our two speakers again, who are both fantastic, highly recommended partners who have been very helpful to us. And who are experts in this area. First, again, is Afshin, who is a co-founder of Atlas, which is a platform that helps the food service industry simplify and automate tip management and payroll and reporting. We also have James, and whenever we have a question on tipping, legal compliance, James is the first guy that any of us call. And he is a principal lawyer at Taxation Lawyers, and again, has fantastic expertise with CRA. And can help your business navigate any of those kind of compliance issues, taxation, and audit. So with that, I'm going to turn it over to our presenters, and thank you both for joining us.
Thank you so much, Anna and Kris, for helping us bring together the second session on tip management, something that we know is near and dear to a lot of hospitality people, from owners, operators, and employees. So again, our goal is to really get into the crux of the matter with this presentation and help provide actionable insights for operators. Of course, really happy that, again, we've had a chance to bring on our advisor, James, to join us for the session so he can share his expertise as well. So here's our plan for today. There is a lot to cover, and we will try to be as concise as possible, leaving opportunities for folks here to ask questions at the very end. As Anna mentioned, feel free to type in your questions in the Q&A box so that we can make sure that other folks can also benefit from seeing it, the question itself and the answers. We'll look to answer some of the questions live by typing out the answers, as well as some of them we can, if we have time for, we can address verbally here as well. We'll start off the presentation with a quick introduction to Atlas, talking about some of the changes that have happened for everyone economically in a post-pandemic world, with majority of transactions being electronic, leaving little to no cash to really help pay out the tips. We want to cover the employer and employee rights, and then we want to really ensure that you are clear about how tips can be exempt from CPP and EI under the direct category as defined by the CRA. A good chunk of the presentation on the second half of it is going to be covered with James as he gets into specific updates that he's come across both at a federal level and provincial level, as well as some guidelines and recommendations for how operators can really deal with inquiries coming in to their business or to their employees from CRA or other regulators. So let's get things started. Quick note on Atlas. We're a technology company, Canadian-based, based out of Toronto. We focus on building technology specifically for the hospitality sector. We have two products, Atlas Operations, which really helps you centralize all your data so that you could benefit from your own historical data by making data-driven decisions. And the second product is Tips, really helping you manage everything having to do with tips. We're proud to work with operators of all sizes, from small coffee shops to franchises, Michelin star locations, as well as international hotels. And when it comes to partnerships, we've been really honored to collaborate closely with national operators like Restaurants Canada and provincial associations across the board. And soon we'll be announcing our partnership with Manitoba as well as British Columbia. One note here is all participants here can benefit from discounted rates that are offered to Restaurants Canada members. So we can always address the details of that at a later session. Okay, jumping into tips. The way that we look at tip management and its challenges, we see that there are three consistent challenges across the board. This is really everywhere where tips are managed. It doesn't have to be restricted to Canada. It happens the same in the UK, in the US, and other places in the world. These three challenges are first, tip division. I think this is the one that everyone's really familiar with. All operators have a set of rules for how the tips that the customers leave should be divided amongst their employees. And these rules are often managed in a spreadsheet, which is tedious to manage, time-consuming, and very much error-prone. God forbid you forget to add an employee in, or if someone's punch and punch outs are incorrect, you have to do a ton of work and reconciliations to get the correct amounts on the division. Tip distribution has become particularly challenging as cash has become less and less the form of payment. So back in the day when everything was in cash, there was always enough cash to pay the employees their tips. But as we move to a world where 95% of transactions are on credit cards, operators have to resort to getting cash deliveries, going to the bank to pick up cash, putting tips on payroll, which ends up being super expensive, or resorting to other ways that are costing their teams time and money. And finally, the area that is perhaps the most murky is the compliance, because there's complicated rules set out by the federal regulators, which would be the CRA, and the provincial regulators, which would be the ministries of labor in each province. Our goal has been to provide automation across the board, addressing all of these three challenges. Before we can talk about the solution, we want to really highlight what the problem is for everyday use cases. So we'll do that by giving you a quick example here. If we go back 15, 20 years ago, where cash was a predominant method of payment, we would remember a time when a customer came in and their bill was a total of $100. Let's put aside taxes for a second. And the customer wanted to leave a tip. The customer would put 115 on the table. When the server would pick up that amount, they would take a look at the bill and they would see that the total sales are 100. So they knew to put the $100 in the till. Whatever was in the till would end up in the bank account of the business. Everything else outside of that would go in a mason jar in control of the employees for them to divide and distribute later. That was a time where you could clearly separate revenues from tips and really clearly show that the tips were in possession of the employees immediately at the end of every shift. Fast forward to where we are today. If your business is anything like majority of the other operators across Canada, likely over 95% of your transactions are taking place on credit cards and debit cards, otherwise known as electronic payments. This really means that the customer goes through the same experience. They still pick up the machine, they select their tip amount, and they put that total through your business. But now there's first a record of that total amount on your POS system. Second, there's a record on it on your payment processor. And third, there's a record of it on your bank when the money is deposited inside of your bank. Now, the responsibility of the business has changed, and the business now has to really ensure that they can prove that that extra $15 was not revenues and that the $15 is not wages when they want to give it back to the employees. This is super critical. Why? Well, because there are two forms of payment for employees in hospitality right now. We have wages and we have tips. So on the wages side, this is when you pay employees their hourly wage or their salary. The employer is the one that makes this payment. Legally, the employer is also responsible for taking off all the taxes and remitting those to the CRA. There is federal tax, provincial tax, and then other taxes known as payroll taxes, which include Canadian Pension Plan, CPP, employment insurance, which is EI, as well as other things like either WorkSafe deductions or WSIB, EHT, depending again on the province. There is other specific taxes there. On the other side, for tips, when tips are not mandatory or auto gratuity, and we'll get into the auto gratuity in a second, but when tips are left truly in a volunteer process by the customer, the payment here is made by the customer. The payment is made to employees. And outside of the province of Quebec, it's the responsibility of the employee to go ahead and report those. These do not require to be on payroll. This really means that tips are a form of income. Any sort of income does have taxes, and they would have federal tax and provincial tax. But because these are not wages, they should not be exposed to CPP, EI, WorkSafe, or WSIB, or other sort of payroll taxes. So in a quick example, you have two types of employees. We know that there's a percentage of the population who, the workforce who does not report their tips. And then we know that there's a percentage that does report it. That responsibility remains with the employees. We're not really here to tell them what they should do. But speaking about facts, factually, there is federal tax and provincial tax. And for that first employee who reports all of their tips, what would happen on their side is that assuming they generated $50,000 of tips in a given year, they would have to pay their federal tax, they would have to pay the provincial tax, but they could legally be exempt from having to pay another 7.6% of taxes, which is the CPP and EI. On the other side, you could be an employee who's never reported, and then you get audited. For that employee as well, if they can prove that those earnings were actually tips and not wages, they too can benefit from that exemption on the total taxes owed and not have to pay CPP and EI. So really, in summary, exemption from CPP and EI being applied to tips is not only to the benefit of the employee, but very much so to the benefit of the employer, because CPP and EI amounts are matched, meaning that both the business and the employee contribute to it. Now, one caveat here is that if an employee wanted to have the choice to include their tip earnings in their Canadian pension plan, they absolutely can. That implies that this employee does report their tips, and at the end of their year, when they're filing, they can easily let their bookkeeper or let their accountant know to include their tips for the CPP and EI. Excuse me, for CPP only, not EI. Okay, so from here, moving on to, well, what are the roles and responsibilities of the employers and employees when it comes down to tips? So there are a couple of very specific decisions that the business can make on their own without influence from the employees. So any business in Canada can say we want to add tipping, and I'm sure we've all seen tipping in a lot of places that it doesn't belong. But when it comes down to hospitality operations, we know tipping is something that's critical for day-to-day operations, both for the employer and the employees. So we all say yes to tippings. That's the first decision. The second decision is, after you've said yes to tipping, what type of a tip model do you want to have in place? Do you want to have a tip model that's referred to as controlled, meaning that the employer, as it's named, controls the tips in one way or another? These are often cases where the employer asks for mandatory gratuity, let's say 18% on tables of 6 or more, or auto gratuity for private events. The employer also holds on to those tips And the employer also decides how those tips are divided, because technically in this world, those auto gratuities are seen as revenue because they're a service charge. And the employer can decide how to divide and distribute those tip amounts. On the other side, the blue box there is when an employer says, yes, I do want to have tipping, so I want my customers to have a chance to leave a tip for my staff, but that is the end of my responsibility there. I don't want to do anything else but holding the money, dividing the money, or distributing the money. All of those things are in the control of the employees, and direct really means that the tips are going directly from the customer to the employees without interference of the employer. And finally, a mixed model, something that we're seeing more and more, is due to an update by CRA that actually James will cover later on. But this is a model where a business runs both types. So as an example, we have a number of hotel operators where they have their restaurant food and beverage program where customers leave tips voluntarily, and those will meet the requirements for direct tips. But on the other side, they have events for which they run contracts for and BEOs for. And in those worlds, they have a predefined set of gratuities that have been defined as autograd that the customer pays for. You are able to be in that yellow box, which means the combination of both direct and controlled, if you can clearly show separation between the revenues and tips generated for direct and revenues and tips generated for controlled. The note here is that those auto gratuities must have sales tax charged on them, so GST or HST, depending on your province. And those amounts must be paid to the employees on payroll because they're seen as wages. So you can have both direct and controlled if you can prove clear separation. Now, I'll move on to a quick summary here from part one for those of you that attended the first webinar. Here, something that we worked closely with James on was simplification of these requirements in a very basic table, really looking at 5 key points. These are the points that CRA would be looking at for them to identify if your tip models should be considered controlled or direct. And the questions are, number 1, are the tips left voluntarily? So if the tips are left voluntarily, this means that the customer did not have any mandatory tipping and they were able to designate their own tip amount, and now those tips could be considered direct. Now, if you were in a case where you wanted to run both, you need to say, yes, we have direct tipping and control tipping, and we can show proof for the separation. The second question is, who came up with the tip division model and the decisions, the final decisions? Every employer naturally has a better view and a vantage point for how the tips should be divided. We understand that all the employees that work so hard at these operations contribute to the experience of the customer. From the host who greets you at the front and directs you to your seat, to the person who fills up your glasses of water, even to the most junior person in a kitchen who is potentially looking after the dishes and the dishwasher there. These individuals all impact the overall service that a customer receives. So the tips are left for the customer, for the full team there. And what needs to happen here is, even though the business can provide recommendations for how the tips should be divided, we would want that decision to be made by a group of employees. And in this world, because we can't go to every single employee and ask their opinion, the recommendation that James had put together was for us to build what we call a gratuity committee or a tip committee. This is a few individuals from the greater group. So as an example, even places that have 200 employees, we limit the tip committee or the gratuity committee to 3 to 5 people. You want to choose an odd number because there's going to be a number of things they can vote on. So you never want to have a deadlock. But there is one single rule that you will make unanimous. This rule is the tip division model itself. And the reason why James thought this would be the approach is because this is how you can ensure fairness. Meaning that, let's say, for instance, you have 3 individuals that you've selected, and the business can select these individuals the first time around. And you've selected your most senior server, you've selected your most senior person from the kitchen team, and perhaps a bartender. What you want to avoid is a world where the bartender and the server say, oh, you know what, why don't we just reduce the amount of tips to the kitchen? And they could vote it out like that. By ensuring that one rule, the single rule for unanimous agreement, is something that everyone needs to agree to, you avoid those circumstances. Because if, for the confirmation to happen, every single person needs to agree to the division rules being suggested. And because you've selected an individual from each one of your critical departments, you ensure that that individual has the best interest of that department in mind. After that, other things can be voted on, and these are done through a set of governance rules. For instance, how often should we review the tip model itself? Let's say, one person says, let's review it every 6 months. The other two say that, no, you know what, that's too disruptive for the business. Why don't we review it once a year? 2 to 1, we'll review it once a year. Let's say that one of those individuals leaves and moves on to another location. You now need to select a new server per se. You can get the servers to vote in the next person they want to represent them, and that person replaces the previous tip committee or gratuity committee's member, tip committee or gratuity committee person's role, and they'll step in and the system continues. So that's one thing around division, which helps you show separation of the decision between the business and the employees. The third and the fourth go hand in hand, and these actually became more clear after a case in 2022 where a restaurant by name of Restaurant Amano had a challenge with the CRA. And here they were using an example and saying our tips should be considered direct, but unfortunately, when this case went to the Federal Court of Appeal, the court decided that the tips were controlled. And the reason why the court made that decision was because the employer was holding on to the tips longer than the end of the shift and making payments the next day, which again is really good next day, but not in the eyes of the CRA. They wanted proof that these tips were put into control of the employees at the end of every shift. And they wanted to show that the employer was not the one processing these payments. Since the tips were paid the next day, and since the employer was the one that was processing these payments, their tip model was considered controlled, and they had to pay CPP and EI for the business as well as the employees for the previous years where the tips were earned. And finally, you may say, I already have all of these policies in place and procedures in place. Well, you'll need the paperwork to be able to prove it. As an example, if your payroll gets audited, you grab your pay stubs, you grab your T4s, and that's the proof that you did things correctly. In this world for direct tips, you need to ensure that you have an agreement in place for the tip committee and an agreement in place for the employees, showing that everyone was fully aware of the direct tip model, its requirements, and the procedures, so that they're all making informed decisions there, and you have the proof to show it. There is a lot more to this, but this was the best way for us to simplify all of this. And again, we're always happy to dive in to the specific circumstances for each operator and really help them resolve their own specific operational challenges. But for now, what I want to do is I want to actually move over here and pass it over to James, who's now going to cover some of the updates we've seen from both federal and provincial regulators. James, over to you, and please let me know when you'd like me to change your slides.
Will do. Everyone, so the first thing is, if you look at the chat box, there was a toolkit that was created after the first webinar, so please check that out. It's a very good resource. And we just added the link for the webinar for part 1 of it, so that if you want to have something fun to watch, you can go back and check out part 1 or not. All right, so on the basis that we're going forward, I wanted to kind of talk to you about the updates. And so when I refer to the updates, if you go to CRA, you type in tips and gratuities in Google, you'll get the CRA 2-page guide. This is the everything for both us and the CRA, in that when I speak to the CRA, I'll talk about the CRA screeners or the rulings officers. They actually look at that document as their guidance, because there is no law on this technically, right? There's 2 cases out there, but CRA, because they're talking about direct and controlled and they're looking at their criteria, they go to their document, which is they're called tips and gratuities. So I urge everyone go through it, because it is the single most determinative thing whenever you're dealing with CRA. So in this upgrade, I mean, this is where Restaurant Canada has hired me to sort of update this thing because it hasn't been updated in a long time, like dramatically updated instead of little things. But the first big update that I wanted to raise is because people are seeing it is the issue that it now talks about serving staff. And it gives these examples, right? You receive tips from the customers, you are part of the serving staff, and then it goes on to talk about it. And then it actually talks about the restaurant owner then putting a tip pool in place to distribute to all employees. And that is, they're saying, controlled. And the direct one, again, starts with the serving staff. So I see this, and it's something that CRA needs to address because to me, it's completely wrong. The law of tips is actually that unless the patron says who's it's for, it's left for everyone that contributes to their experience. So as an employer, you're always faced with this question of, how do you draw the box around what employees contribute to that experience or not in terms of who should get a share of the gratuities. The fact that CRA says that it's the serving staff, I think was a mistake on their part, that no one was thinking about it. And I'll tell you why I think it was a mistake on their part, or they will understand that. But the idea is I don't want anybody going out there saying the serving staff decide the tip arrangements for the entire restaurant. I think that's completely wrong. And the problem is if you put it in place like that and you go forward with it, you might never be able to change it because the serving staff are the committee. So I always tell people, despite what you see there, the law is that the gratuities are to be shared amongst all employees that contribute to that patron's experience. And this is the stepping stone at the start of you deciding, hey, there's the employee committee, right? And usually everybody's starting off and they're, what do I do? And I always tell them this is how you should do your committee. To me, in my experience, a 5-member committee is always the best, right? 2 back of the house, 2 front of the house at a manager level. And when I mean manager level, I like, floor supervisor kind of level as opposed to a GM level. But the idea is that that's an equal balancing in the restaurant of everybody that's contributing the experience. So if you're going to that guide and you see that first part, I really disagree with CRA making it sound like the servers get to decide who gets the rest of the tips. I'm assuming it came from someone drafting this who probably remembers the old style where a server would tip to the back of the house and then decide about that. But that model doesn't exist in most restaurants. So that's the first thing I wanted to raise as a new change from CRA that I'm trying to address with Restaurants Canada. So we'll go to the next slide. So this is another big change. I mean, Restaurants Canada actually got about 15 or 10 years ago, they actually had CRA admit in a ruling, which they then got to make public, about that it's not a light switch where either it's direct or it's controlled, and that they in that ruling accepted it's both. So they recently updated this policy to say there can be both in the restaurant. The issue that exists in that old release was they actually gave you an example, and of course CRA unhelpfully didn't give us an example of what they see as being a proper blending of controlled and direct. In that old example, it was a banquet room, which basically was on its own POS. So, and that's easy, right? It was easy to isolate that POS, that gratuity, and to say, hey, listen, and usually because the banquet hall being booked out, most employers will put a mandatory gratuity on it. So, and that's another thing, right? Just remember, mandatory gratuity, it changes it automatically to a controlled tip system to the extent that you can delineate what that autograt is. And I'll break that down more, and I tell people this is the big difference. You can have an employee committee. The employee committee can decide the distribution of the tips. Everything looks like direct, except you have an auto gratuity, which can ruin the entire thing. So whenever you have an auto gratuity or mandatory gratuity, please ensure that you treat it very, very carefully. So to get into what you have to do with it, in that example, because it was a banquet hall and it was a separate POS, it was very easy to isolate those controlled tips. The employer could produce the POS reads and show the auditor, hey, these are all the gratuities that were received. under that mandatory gratuity, and then we treated him as controlled, and then we went and put him in payroll. We didn't even give it to the employee committee. So that's where if you've got an autograt or a mandatory gratuity, be very, very careful about what it does. So while CRA can accept that you can have both, what I think that you're going to have the most problem is if you have, say, a common dining area and you've got tables of 8, and the CRA auditor is like, okay, show me all the reads of tables of 8 where you received those gratuities and how you treated them as controlled. And the problem is if you can't do that, then the problem with the auditor is the auditor might say, all right, well, I find the entire gratuity system is controlled. So if you have mandatory gratuity or auto gratuity, be very careful about how you're using that. And the other issue is, I like it when if you have an autograd maturity gratuity, well, Alice can deal with it. I always tell people be very careful in that you generally want to put it into your payroll system because you're already accepting that it's controlled, subject to EI and CPP. And I find that most restaurant payroll systems work a lot better treating it as pay so that you can distinguish between your controlled as subject to pay and your direct as not going into payroll. Next slide. Okay, so this is something that's now coming up, and we're seeing more of it. Like Restaurants Canada is not, I don't want to say in a fist fight, but the start with Workplace BC is I think one of the most vocal ones. Ontario's been very quiet but sly, but I've already had a fight with them on this. So the fight with the workplace and safety boards is, they're looking at premiums. What is your premium as an employer that you should be paying to them to cover their operations for when workers get injured? So in looking at gratuities, a lot of them seem to be going to this old term of what was called verifiable tips or verifiable gratuities. And the old version was that it was, okay, when an employer puts the gratuities in the pay, that is a verifiable tip. And if you look at Ontario and even BC, I think the old documentation on it shows that. They're now sort of coming up with a new thing, which is verifiable tips are the gratuities that are seen on the credit cards, which means every gratuity that you see on a credit card, they think could be verifiable because the employer can see it. Obviously, that's a major, major change, given that we're looking at 90% of gratuities as occurring electronically. So we're basically trying to educate the various WorkSafe places or we will be, that verifiable tips is not every tip on the credit card. That's not what verifiable tips was meant to do, nor is it what is the object of paying premiums, right? The idea of premiums is you pay it on what the employer as pays to the employees. And this is, if you go back to like control tips, the CRA takes the basis of control tips from the basis of this 1968 Supreme Court of Canada case that said, okay, in certain situations, gratuities are paid by the employer like wages. And so that's where the idea of control tips come from. So the message here to the workplace safeties is verifiable control tips are verifiable tips. So again, if you have a direct tip system, you shouldn't be caught, workplace, BC or whomever shouldn't be looking at those gratuities. They should only be looking at your control tips, which are already on your payroll, which is what they're supposed to be working off of for your premiums. So, and I say that it's an ongoing fight. I had a dispute with Ontario. We were at an auditor who was still dealing with it at the objection stage. At the end, agreed, yes, a verifiable tip, a control tip is a verifiable tip. And that was also with the assistance of ORMA that we got the director of stakeholder compliance was actually in agreement with us about why we should be using control tips, going back to the theory of when gratuities are subject to premiums. So this is sort of a stay tuned as Restaurants Canada works across Canada to get policies through each of the provinces. So this is sort of, I mean, to be honest, this is more Atlas. As Atlas works across Canada, it makes sure that it looks at the bills even when they're pending. So Ontario is ahead of everybody else in dealing with gratuities. But remember, Ontario is not about EI and CPP. Ontario is about the Employment Standards Act in protecting workers. It's called Working for Workers Act, where they want to put the protections on gratuities, because there's very little protective legislation across Canada about gratuities. So Ontario's got the strongest. So you'll see BC is following it, and to the extent I think Alberta is following it. And then you've got I think New Brunswick has also been looking at it. So the idea is, because Ontario is so far ahead and has put the time into it, most provinces, why reinvent the wheel? We'll just copy it. So if you're in any other province, it's always useful to look at what Ontario is doing for gratuities under the Employment Standards Act, because I feel like it's a sure bet that you'll see these protections being rolled into your province. So in Ontario, if you're an owner, director, or shareholder, you cannot be part of the tip pool unless you do a same or similar position as someone else in that restaurant. And the idea for that is, if the Employment Standards Act, Ministry of Labor comes to investigate, you can say, yes, as employer, I got to share the tips, but John beside me does the same role and I get the same as him. And so if you don't have somebody doing the same or similar role, you've really got to watch this, because the next step is you've actually got to be able to prove it's a norm in the industry. And so there is Employment Standards Act cases on this, where the employer had to go in and explain why, the restaurant beside them, who employed the owner, who did the same role, and what that was. But in the case I looked at, they lost because they didn't call that person as a witness to give evidence before the tribunal. So if you are, owner, director, shareholder, and you are taking gratuities, make sure that you have it documented about why someone in your restaurant gets the same amount as you. Or if there is no one like you in that restaurant, make sure you go out and get someone else's restaurant's documents or basis, so that you can be able to show that if the Employment Standards Act, the Ministry of Labor investigates. The other really big change in Ontario too was that they wanted tips paid like wages. So wages can only be paid three ways, right? Cash, credit, check, or deposit into the bank account. And there's a bunch of rules with the bank account, right? It's got to be the bank account of that person and only that person. They don't check, but they just make you sort of say that. So gratuities prior to an amendment, they had, Ministry of Labor had an internal document on it, and they were treating it the same, but there was no law, and so they got into a fight with a certain payment processor who has a card system, as saying, well, you can't do that. So they dropped that fight, but what they did come out was saying, okay, we're amending the legislation now. So if you are paying gratuities, you've got to be compliant with what, in Ontario at least, with what Ontario says are the three ways that an employee can receive it. So are they receiving it as cash, check, or direct deposit to their account? And as I understand it too, Ontario is going to be amending this a little bit, because there's a little bit of a loophole that, hey, if somebody else, like an employee committee, pays it to the employees, it can't do it the same way. So as I understand, that's being changed so that anybody that's paying out these gratuities must do it by the three approved ways. So very careful to watch on that. And then the point was, Alberta's Bill 210 was also looking at it the same way, but it didn't go anywhere. It died on second reading. Mm-hmm. So this is what I want to talk to you about. Is I'm seeing this across Canada. I've got more clients on more people contacting me about a CRA ruling fights than in the last 3 years. I've never seen so much. And so how it's starting is it's starting with a screening. So they've told me that it's the program's called the CPP contributors. And if your employees are putting their gratuities on line 104, which is also known as 10400, then because other systems are that is like a bit of a catch-all line. Other amounts that go on there can come from other sources. So now they're looking at that and saying, hey, calling up the employee saying, what is this? Where is this amount from? A lot of times they know because you've got a T4 from a restaurant, but they're still calling up the employees to say, please tell us about that. So when they call up the employee, they will then screening the employee to ask them questions about the tip system. And it's funny because I've talked to employees and employers on it, and the employees are all freaking out because it's like, if they didn't report the full amount, they're wondering, is CRA on to me? But that's the giveaway on this, is that they aren't. CRA doesn't actually question the amount. They question the employee over the system. Tell us about, do you get paid daily? Do you get paid in cash? Who makes the decisions? Do you have an employee committee? All those wonderful questions. So where in the past, you saw these dedicated audits that would go into restaurant areas and then look at all restaurants in the areas, or if you fired somebody and they went to Service Canada and said, hey, I had a control tip system, I should be getting more EI, or if you want anybody that went on MAP benefits or PAP benefits and again said, hey, I have a control tip system. Those were the old ways. This is the new way of auditing, I think, by CRA, is that if the amount is reported on line 104, then CRA is looking at that as a screening technique to say, does the restaurant have a controlled or direct tip system? So again, they're not asking about the amounts. Every employee that I've talked to was a little, I don't know, happy because they didn't say, hey, did you report the correct amount? None of those kind of questions. It's all questions about, tell us the system that's in place. But that tells you what CRA is looking at. If your employee tells you as the employer, hey, I got this call, red light, they are looking at your employee system. I'm also saying to the employees who are in the middle of this, make sure that you don't give random answers, but try and articulate the system is placed, because most of the time that people are calling me, it's because I've already changed their system or worked on their restaurant and they've got a direct tip system. And so there's nothing more worrisome to me or bugging than me. It's like, well, tell them about it. You got an employee committee, they have a percentage, it's done, all the things that but they're so worried about that they didn't report the same amount that I find that they're blowing off the CRA and giving really nebulous, I don't know how much I got, thinking that somehow gets them out of the CRA, Venus flytrap. It's not, they're not even looking at you right now. The worst part of this, when I hear these stories, is that these nebulous answers actually make it, the CRA is like, okay, I think we got a control tip system. They put it into a rulings officer. And then again, if they don't get good answers, that's when the payroll person comes out, the trust examiner, and actually looks at the amounts of what the employees got, and then starts looking at the T4, amending the T4s. So the employee was almost the victim, the one I was talking was almost the victim of his misfortune, because if he told them, about the direct tip system and the screener said, you got a direct tip system and didn't do anything with it, there would be no audit of them. So just wanting you aware, this is where I'm telling people, if you've got a good direct tip system, let your employees know if they get a call, you're there to help, or they can get help, but not answering it, waffling answers because they think that they didn't report the entire amount actually hurts them. So that's where employees need to be on side with the correct answers. So then to go on, the screener asks the questions. Sounds like a control tip system. They send it off to a rulings officer. The rulings officer will then send out letters to the employee and to the employer saying, hey, welcome, I'm the rulings officer for this employee and for this period of time, because that's how rulings works. They've got a mandate, person and time. And I'm looking at, they're doing a ruling on whether the gratuities are pensionable or insurable. So the employer will then, the rulings officer will then reach out, generally first, I find, to the employee, ask them a bunch of questions to sort of get their idea of what's going on. And then we'll go to the employer and sort of expand on those answers and find out what they have. So at the rulings, you are, as the employer and the employees, everybody's entitled to be represented. It's not a plug for me. It's just saying you don't need to do it yourself, especially if you don't have the answers. I'm always telling people, there's no egg timer beside your phone that says you have to give them the answer right now. everybody really finds it daunting with CRA when they're talking to them. It's like, okay, listen, why don't we put your questions in writing, and because I want to give you the best answer possible, and I'll get the person to look into it. And honestly, I as a former DOJ person, I love doing that, because there's nothing worse than when the CRA is hearing something and they don't fully understand it and they get the answer wrong, and they go down the lines of calling it a control tip system only to find out in court that they got it all wrong. So you are entitled to have representation when you get contacted by a rulings officer. Please don't wait till you hear the questions. If you're going to get help, when you get the letter, that's when you seek the help, right? Because whoever's going to help you has to speed up, learn your system, and to be able to talk to the rulings officer, because they generally are going to call you in about 30 days. But just as a note, between screening officer and rulings officer, I've seen it being 6 months or more before that happens. So if the rulings officer says, you know what, it's a control tip system, that's their ruling, right? It is, the gratuities are pensionable and insurable. The rulings officer is not using numbers. There's no one's looking at what is the bill or what is the effect. The rulings officer just finds that ruling, and then the next step is that they send it back to what they call the CPP contributors program, which will then decide if they will send a trust examiner out, which they do. And the idea of the trust examiner is to say, okay, now that you've found it's a control tip system, what are the EI and CPP amounts for that employee? That's the happy step, right? The unhappy step is when, because that ruling applies to all employees, the trust examiner can then expand it and say, all right, now we're going to look at all your employees. What did all the employees get? Because I have to look at, see what is their insurable and pensionable additions. And remember, because you as the employer didn't withhold off the gratuities, being the employer portion, you are liable for that. CRA, when they give you the assessment bill, they assess you for the employee portion and the employee portion and the employer portion. So very, very, very bad thing, right? So that's why compliance is everything, and that's why Atlas talks about what your potential bill is if you've gotten it wrong.
Okay. James, quick just a heads up on the time itself, and one relevant question that came up. Are CRA screeners going back multiple years, or is it more regarding the previous and the current taxation year?
So typically what they're doing is, it's just the CRA speed, right? They are looking at someone's return, looking at what was reported in line 104, and then that's the start, right? It's James Rhodes, and it's the 2022 taxation year amount reported on his line 104. So that's the start of it. Then it's sent to the rulings officer, and generally they will be January 1st, 2022 to December 31st, 22. They can expand it forward, but they generally don't expand it ever backwards. So usually the screener has started the clock as to when it will go. How far back they can go is generally they don't go back. CRA can't go back on income tax more than 3 years, because it's what's called statute barred. So I find they do not look at anything later than 3 years back, right? So 3 years back. After that, it's what's called statute barred, and then they've got to show negligence and things like that, which nobody will meet the negligence test in this kind of test systems, because it's so hard to figure out sometimes whether you have direct or control.
Okay, there's a few other questions coming up, but there's a couple more slides left, so we can get through those and then address the questions.
Okay. So this is the first point, is really what I was talking about, is when, I would tell your employees about this. If you've got a direct tip system, please tell them, hey, it's a direct tip system, and CRA might call you on this. If you're reporting it on your returns, don't be scared. Talk about the system that we have in place, because if they feel that it's a direct tip system, they don't actually send it off to rulings, and that might be the end of it. So happy times, right?
Yep.
So the other big point is, I find that people, they get a ruling on one employee and they're like, well, it's just one employee. What's that? What's the value of that? It's like, well, that's the problem, is the one employee, it's not one employee's, it's the EI and CPP on one employee, but it's your entire gratuity system that got found to be controlled, which can then, it's up to CRA to expand that and say, you know what, we're going to look at all employees. So if you fight the ruling, which has no numbers in it, you have that right. You file an objection to the ruling, it then goes to appeals. So that's probably, it's about a year before an appeals officer gets assigned. And if you don't like that, then you go to tax court, right? Another year. The idea is that you don't have numbers, you have what your system is actually applied to. The CRA trust examiner I talked to actually liked that because she's like, I really didn't want to do the amended T4s for everyone and create this huge system, because then you've got to start dealing with what happens to the employees from a fight perspective. Like, are they fighting? They don't have any bills, so they don't really care, but it becomes a really big problem. So I always tell people, when you get the ruling, really consider fighting it at that step, because it's generally on one employee. You don't have amount to it, but be assured that CRA can go out and it creates a problem for all your employee. Your entire employee system or your employees can be assessed for the EI and CPP on each of them that was never remitted or deducted by you as the employer.
Great. Okay. And then just a quick overview of like, what does a typical audit process look like? Because you mentioned a few things around the timelines. Can you just sort of high level provide a range of time from the time the first call comes in to the time that it's all settled and the decision's made?
So, I mean, on average, so the person files for 2022. We'll just make that example up, right? Well, they're not filing till probably April 30th of 2023. So just keep that in mind when time's going by. The call from a screener, it was about 6 months later. So I would expect that in 2023 to 2024, you're going to get a screening call. And then after that, say the screener's made its referral, it's about 6 months later that you see a rulings officer sending you a letter. So while the screening person's calling you in, mid 2023, probably, making the decision by, the end of 2023, this is where you can expect a call in mid 2024 towards the end of 2024. So that's sort of my timeline. And the rulings officers work very fast because they will interview the employee, the employer, ask for documents. In overall, I think they generally try and wrap it up in under 30 days to 60 days max. So it's very quick. And that's why my comment was, if you need someone to help you with the rulings, don't wait till they call you, because they've already used up about 30 days and they're now basically teed up to start asking questions and move forward and make their decision in the next 30 to 60 days tops.
Great.
So this slide was about, going back to the elementaries of dealing with CRA. I personally, I find that people want to answer CRA because, one, the CRA people are nice, but two, they just, if I'm helpful, maybe, what happens? They just don't realize that if you say the wrong things or it's taken the wrong way, it gets put in stone. CRA and the reports will write down what you said. And I don't know how many times I've been in an objection where the client's looking, because I'll do the disclosure, I'll get all the notes, and they'll be looking, I never said that. And I was like, that's the problem of talking to them, is that what you didn't say is not what they heard, right? They hear sometimes, we're all pre-programmed sometimes to hear what we want to hear or what we think we want to hear or close to what we heard. Like I constantly hear that I'm the best tax lawyer, but I know no one's saying that. So, right, Afshin? So this is where I like it when people say to the CRA person, I want to answer all your questions. Just put it in writing, because it's going to be technical, because the law is very, very technical on this. And I will get you the answers. I will undertake to get you the answers. I will find the people in my organization that can give you the answers, and I want to put them in writing so that there's no mistakes about what we said. But I need your questions in writing because I need to understand what you're saying, so there's no questions. And this is where, like, sometimes you get the CRA like, I don't want to put it in writing. I just want to answer over the phone, because then they got to go out and use a keyboard or something. That's your right. Your right is to ask for the questions in writing. So I just tell people, like, just exercise your right. Don't feel bad that they have to type it up. And at the end of the day, you'll never have a misunderstanding. Like, I have a fight right now at objections where they were using a tip system and they heard something, and it was completely wrong. The employer didn't make the decision. The employee committee made the decision. But because it's not in writing, I don't have anything that I can point to. I'm just telling them, well, it's wrong, and here's the facts as to why you can see for yourself why that's wrong. So don't engage verbal. It never ends up well. I know it can be fast and nice, but I find it never ends up well, because when someone like me is getting called in because it went wrong, and I'm like, what did you say? Because you didn't put it in writing. And I get upset with them. So, and you don't have to call them right back. Like, people call and they're like, I gotta answer the calls because they called me. It's like, no, I'll call you back, or, engage in the dialogue, right? Of put the questions in writing. I'm gonna have the right person deal with this and give you the best answers possible. What more can they want, right? So, and I always say, people are like, oh, it's one person, right? Okay, it's one person, but what is your entire restaurant's 3-year bill if it's found to be a control tip system? I always tell people, that's really what you're fighting about, right? In Interpeller and Restaurant Manual, the 2 cases that went to court, it was one employee, right? In the end, it was all employees and 3 years. So, and plus, I don't say 3 years, but it's 3 years that they can go before it goes statute barred. Remember all the time it takes to deal with this, and you're not fixing it. Those are all the years that get added to it. So while I say 3, it might be 4 or 5 by the time you fix it. All right, next. Is that it?
One last one, just to change of thought. So this is the initiative that you're taking along with the government relations team at Restaurants Canada.
Yeah. So I was just in talking to rulings officers too. They were all on the same page, except for the people in Ottawa, the CRA. Let's update that page, right? Aside from the WSIB fights, which might be fights to educate them, CRA's bulletin still uses the word we bellhop, right? I don't know if that exists anymore, but that's unfortunately where they're at in their updating, right? When I say updates, they make little things like, I don't know why they added server, but what we're trying to do, or we want to do, is, okay, employee committees. Employee committees often are the only way a large restaurant can make coherent decisions on behalf of its employees, right? Much like why we have, MPs and MPPs. You have an employee committee to, break down all those things, and they deal with it, and then they make a decision on behalf of all employees. And only, 5 people need to sign off on documents as opposed to 300. So, but that's not in there. It's not in their sheet, right? There's nothing about employee committees. Although they do say in a directive system, the employees have to decide it. So I want them to start, CRA, to do updates. Employee committees is number 1. The other one is addressing electronic tips. The problem with CRA, that bulletin, is it talks about cash. And so CRA is saying, well, you got to give all the cash tips at the end of the shift, right? But the new tip systems, they actually work on PADs, pre-authorized debits. The money is actually in the committee's hands before the patron even leads it. But I'm seeing some robot, CRA, like, where is the cash? There is no cash. The money went out actually before the patron even leaves the tip. So it's just the same as if the employer had paid cash tips out to the employees at the end of the shift. They've done that through the transferring the money electronically. And then I find that CRA sometimes is like, but there's no cash. And it's like, they don't need to be cash, right? Cash is, 1, is an insurance risk for restaurants. 2, it's a safety risk depending on the amounts you're dealing with, right? So, and money is supposed to be fungible. So this is something else I'm trying to get CRA to deal with. Let's hit this whatever century we're in and start talking about the new ways of gratuities that don't require cash or talk just about cash. So that's the other thing to be dealt with CRA.
Great. Okay, so those are the major updates from federal and provincial side. We are going to queue up a quick poll just to be able to gauge where the audience is with their current process and how Atlas can be of help if you are interested. So you should see that poll questions, really 3 simple questions on your screen right now. If you can take a quick minute to answer those, that would be greatly appreciated. Of course, again, anyone who is a member or is part of this webinar will get discounted offers from Atlas. Now, moving on to a few things where Atlas can be of help, because these are very tedious and time-consuming activities. Just want to cover how we work with operators. So first off, when you consider the fees here, we have two examples of how Atlas can save you money, even more than what you imagine the fees would be. Number one, you're currently doing a lot of manual work, whether it's yourself, the owner, or a salaried member, or an hourly member. Still, time is money, and you are spending time taking care of those spreadsheets, taking care of cash deliveries, or going to the bank. If someone's tips are $67 and you don't have the exact change, you have to have now a spreadsheet that keeps track of that. All of these things cost you. So we've calculated this as 5 hours a week at $25 an hour. This costs you over $530 a month, or over $6,400 a year. On the other side, you have the tax liability, which again, if your business is generating $1 million in sales and average tips are 20%, you have $200,000 of tips that you've generated for your employees. And if your system is considered controlled, you can be exposed to over 15% of penalties, which adds up to be $30,000 per every $1 million of sales. That's the liability that we can help you avoid. With Atlas, you get, from the employer's perspective, a CRA compliant solution on provinces where it is allowed. And the only provinces that it is not allowed are British Columbia, New Brunswick, and Quebec. You are able to offset the transaction fees on credit card tips. So if someone leaves a credit card tip of $100 on a Visa and your payment processor takes 2%, meaning that you only receive $98, we can help you offset that so you only pay $98 and not $100. We help automate the tip division and distribution, and we remove cash to whatever degree you'd like. For the employees, we promise that they receive 100% of their hard-earned tips directly deposited to their bank account. We do not put the amounts on credit cards or charge cards. Transparent tip reports, tip division models managed by them, and collectively both parties will get exemption from CPP and EI. Now, one other thing that we're putting together with our partners is a resource not only for the businesses, but really for your employees and your patrons. Often patrons are confused about the needs for tipping in Canada, and they state things like, I recently visited Asia or Japan or, Switzerland, and there was no tipping. How come there is tipping? Here, we've actually provided economic answers that really explain why tipping is very much needed in regions like Canada, the US, the UK, and why it will not go away simply as a result of taxes, a high cost of labor, high cost of goods sold, and other factors. Here, our goal is to not only educate patrons, but also to educate employees, because one of the most important factors that James mentioned is perhaps over 90% of these audits are the result of an employee asking innocent questions that they didn't know the answers to, thereby getting themselves in trouble by exposing themselves to additional taxes, getting all of their friends and coworkers in trouble, and also their place of business, all being perhaps incorrectly categorized as controlled tips when they could be categorized as direct tips. So this is a resource we'll continue to update with new legislation, both federally and provincially. With that, there's a couple of questions left in the channel. James, I wanted you to take a look at them. If you can please go over those, that would be appreciated.
You would like talk about them or?
Yeah, so if you want to address the first couple,
Okay.
I think. Yeah.
Sure. What would you say is the first couple? I was just
So the first one's the WCB employer fact sheet. Also says.
Oh, okay.
Yeah.
So this is where I don't know the actual fact sheet, smack sheet, right? The end of the day is that I'm gonna probably get a nasty call from someone, but the idea at the end of the day is there's legislation, right? The legislation, I gotta go look at the legislation for Alberta and see, the idea is premiums. And the idea of the premiums paid by employers is because the employers are paying wages or like wages, right? That's usually the basis of most workman's compensation schemes, is that you aren't looking to make the employer pay premiums on what some random person gave to them. So I'll say random person like patrons, but this is the idea behind direct tips and control tips, going back to, Supreme Court of Canada's decision 1968, was some gratuities are akin to being what the employer paid, and that's a control tip system. Some things are not. They're gratuitous amounts paid by a random person who wants to show their appreciation, and those aren't found to be paid by the employer. So when I hear the WSIBs coming at it saying it's all gratuities, it's like, but that's not, the law has never been like that. And then when I look at your underlying legislation, there's no mention of gratuities anywhere. And so the idea of all of these things is to go back to, what is the theory behind workman's placement compensation, right? Is that you take premiums from the employer for amounts that the employer has paid that are like wages, not everything that flows through the system. So to me, that's just my, position. So when I look at the old notices on most workplace safeties, they actually incorporated that, right? They were looking at what the employer paid and had taken into wages. I don't know if it's deficits or governments, but I find that, to me, they've gone a little wrong. And, despite CRA being the leading authority on case law, on thinking about things, they're not really turning to them. And this is where, like, Ontario did, and I was very happy, because I was like, why would you ever not turn? Why are you all reinventing the wheels when you've got a Supreme Court Canada case that actually applies across Canada to every type of law, right? It's a theory that's out there. So that's where I just haven't got into it, but fact sheet, you've got to follow this is the problem. You do what the cop says, right? So you don't get a ticket. And so if Alberta right now is saying that, well, then everybody should be in compliance with Alberta and BC and all that. But this is where, I'm getting engaged to go in there and change what the cop says, so that, hey, it turns out it's okay to go 110 or 120 on the 427 and no ticket. So that's where I tell you what my role is in terms of your compliance. Though you've got to stay compliant with what they're thinking, right? What the cop is telling you is what the cop's telling you. Is not something that you fight about until the cop changes the fact sheet and says, okay, here's the new facts. But that's my job, is to get them to change the fact sheet so that everything changes going forward. So if a restaurant today is non-compliant, paying out tips all in cash once a week, and the switch to a system like Atlas tomorrow, how would CRA handle that in the case of an audit? Do you gain any sympathy? Not really. This is the problem, is that the system is the system. Sometimes think of it like a bunch of robots, right? So I've been dealing with ones like, there was someone who had I thought, a control tip system, but because the worker came in after the system was fixed, the CRA rulings officer's like, it's all good. I don't need to look at anything before that. And that's the truth, right? If they're not dealing if the CRA auditor or rulings officer doesn't go out and look for problems, right? They're given, here's the employee, here's the time period, I will make my ruling on that. And that person lucked out, because in the year before it was all messed up, and the year that they looked at it was fixed. So you can fix it going forward. And this is part of the reason of fighting it too, is that, or you're dealing with CRA, right? Is like, okay, I fixed it, and going forward, as the old stuff gets too old, CRA doesn't look at it. They're not there to find, maybe on like an income tax auditor, the rulings officers are very good. They stick to their ruling and the employee, and they can see problems, and they're like, doesn't matter, not part of my ruling. I'm not here to pontificate on what is right or wrong in the state of the world.
Right. Yeah. So with that,
we'll wrap it up. Kris, over to you.
Yes. Yeah. No, again, thank you, James and Afshin, for your time. Absolutely fantastic presentation. As you've pointed out, this is an incredibly complex topic, and one that can have significant consequences for any business. So again, we say thank you, and thank you for everyone who registered today. If you did register, we will send you a copy of of the recording. And if you've opted in to hear from Atlas, please keep an eye out for follow-up emails, including some of the strategies and tools we've talked about today. Where there are follow-up questions, please reach out, and we can work with Afshin and James to try to answer any follow-up questions. And again, any questions you have, or any time you like to reach out to anybody at Restaurants Canada to talk about issues that are important to you and your business, please feel welcome to give us a call anytime. And again, big thank you to Afshin and James. You're great partners to our business, and incredibly helpful, great resources for our GR team and members at large. So thank you, everyone, today.
Fantastic.
Thank you.
Thanks so much, Kris, and thanks everyone who joined for today.